what this tells us. We had this obviously expectations, but now it's finally happened, and what do we understand?
Yeah, it definitely shows Vanke is under severe liquidity strains now, and I think the plan we are seeing about a 1 year delay is actually worse than lots of investors' expectation. And Vanke also have another yuan notes in over 3 billion yuan, coming due in late December. So right now, investors are expecting that yuan note will probably see the same treatment. And in overall, Vanke has more than 13 billion yuan note coming due by the end of next June. So investors are wondering whether what happened to other yuan note as well. Yeah.
Christy, you talked about in your latest reaction piece. I mean, it's a 1 year delay, and you're saying the impact from this could be even greater than what we saw with Evergrande and Country Garden. Why?
Right. So from a housing sentiment standpoint, I think incrementally speaking, this is less big of a shock than Evergrande and Country Garden when it happened. But the significance here is that Vanke is a state-backed developer. So I think with its failure to pay its bond payment, I think the significance here is that investors will start to worry, how safe are state-backed developers, including local government-owned developers or centrally owned developers. How should we perceive them? And I think that would change the perception of home buyers. Are they still confident in buying pre-sold homes from state-owned developers? So far in this year to date, state-owned developers, the sales are down 9%, versus private developers, they're down 29%. So throughout the crisis, state-owned developers, they're relatively unscathed, and the contagion has been contained in the private developer space. But I think with what happened to Vanke, which has a larger shareholder from Shenzhen Metro, which is a state-owned entity, I think this is going to be a tipping point for the market.
How does that then also play into what happens next if you have that fear that starts to spread and that risk of contagion? What are the next things that you actually watch out for?
Yeah, so next week, Vanke will hold meetings with bondholders, try to seek their support for the yuan note delays. So we will definitely watch closely about how much support they can get. If they cannot get enough support, it will be a default. And also, I think offshore bondholders are also watching closely on this because, offshore they have over $1.3 billion notes. So they are watching closely about what's happening onshore and then how this is going to impact them as well.
What are people telling you about this right now? I mean, people are saying they're liking this to Country Garden, to like Evergrande. In terms of eventual recoveries, what sort of scenarios are they mapping out now?
I think right now the pricing already, pricing about the recovery rate, right?
Yeah.
And then I think investors are definitely, as Christy said, trying to reprocess what's the government stance on this property crisis. And I think right now it's actually Vanke maybe on their own to deal with this debt issue because previously always relied on its largest shareholder, Shenzhen Metro, and also the government support. But right now it's actually the moment people need to think about how they're going to repay those debt.
And then amongst all of this, we've had China telling stats providers to withhold key data on home sales. How does that also add to the level of angst, do you think, and why exactly is that happening?
Right, so it was a big surprise yesterday because the two private data providers have been consistently releasing this data end of every month. And now that it seems to be that there's more intervention from the government to try and control the narrative and shield homebuyer confidence. And I think from here you would possibly see more government actions to try and mitigate the impact on Vanke's debt crisis on the overall home sales market. But as I said before, there's limited ammunition in the policy toolbox. Mortgage rate and down payment ratios are already at record low. And also you are seeing home purchase restrictions. They're already relaxed in most of the cities except a few. So I think what we can do from here is more limited.
What are your models and the like telling you about what November data is going to look like then?
Right, so November data, what we had predicted earlier is an over 30% decline year over year because last year, same time last year, we had a high base from aggressive stimulus policy, if you remember. And the data did came out and we had access to that. And the number came up to be a 36% year-over-year decline. We expect December to continue to have that kind of steep decline, which is important because year-end sales push is very important for developers to try and catch up at the end of the year.